On this video, we're going to be talking about market structure. Yeah, market structure is very important for you to master when you are getting to learn the basics about technical analysis. So basically, yeah, we use market structure to identify what the market is currently doing. If a market is on an uptrend, we want to use market structure to identify that. If a market is on a downtrend as well, we want to also use market structure to identify what the market is currently doing. Yeah. So for an uptrending market, yeah, for an uptrending market, this is when the price of any given asset you are trading is going on a trend higher and higher. So let's say we have something like this on BTC or any other pair. High, low, high, low. In this case, the market is giving us bullish momentum. Yeah, the market is giving us bullish momentum. This is how the market is giving us bullish momentum. It's telling us that, okay, at this point we had a low, we had a high, we had a low, we had a high, we had a low, we had a high, and the market is just basically going up, respecting every level. So this is just the basis of higher highs and higher lows, higher highs and higher lows, and just like steps here, it's keep going higher, breaking the highs and creating new highs. It keeps breaking the previous high to create new high, and it keep going up in price. Whenever we see something like this, we consider that current market trend at that particular time frame you are trading to be going on an uptrend. We consider that to be going on an uptrend, yeah? Highs, higher low, higher high. We consider this market to be going on an uptrend. Now, let me give you a quick example on the charts. Let's see how to spot these trends here. So if you see what we have here, looking at this current trend, market is from this point here, we had the market giving us this structural look, giving us a series of highs and lows, highs and lows, highs and lows. Now this is telling us that the market is going on an uptrend. So this is where we had a break. So we could see we had a break around the zone. Yeah. So in this case, the market is increasing in price. The market is going highs, giving us series of highs, lows, and we should just expect the market to continue going on an uptrend. Whenever we see an uptrending market, we expect the market to continue going on an uptrend. If we see a downtrending market, we expect the market to keep going on a downtrend till it gets to a particular point of interest, and maybe it reacts from there and turn around. So for a downtrending market here, this is when the price is doing the opposite here. At this point, the price will be giving us that look, bearish look here, going lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And as you can see, it has to be very clear where the direction is currently heading to. Yeah. Now, for you to identify a trend, in the market, you are supposed to be able to identify every level. Yeah. If you can't identify every level in that particular trend accurately, it means you haven't gotten the trend right. So we have this low here, we have this low. You have to be able to identify all of the levels in your trend. We have that the market broke this low and create us a lower low. So this is another level. You have to be able to identify all of these levels. So whenever you are marking out your trend, you make sure you can identify all of the levels in that particular trend. You can identify all of the level. It has to be very clear that you can identify all of the levels so that you'll be able to accurately tell when the structure is shifting from a downtrend to an uptrend, or from an uptrend to a downtrend. So for a downtrending market, we expect this pattern to continue until it switch. Lower lows, lower high, lower lows, lower high, lower lows, lower high, and lower lows. It has to be very clear you are seeing what you're doing, and you expect this pattern to continue until it switch. So in this case, what you don't want to see for you to continue identifying this market as a downtrend is if we have something like this from a downtrend and the market switch broke above. So in a case scenario where we have the market creating lows, highs, low, high, low, high, low, high, and all of a sudden we had a switch, this is what is called the change in market structure. So we're expecting at this point the market structure has changed from a downtrend to an uptrend. It has changed from a downtrend to an uptrend, and when we have a switch, we expect the market to continue going in that direction. And it should likely go back to take out the liquidity it forms here. But liquidity topic is for another day though. So this is what we are going. This is how to identify where a trend is going. You want to know exactly where you are in the market. Once you are able to understand market structure accurately, this is when you'll be able to tell when we are in a current trend, the market is switching from one trend to another. And when you are marking it out, know that it has to be very clear without you having to guesswork anything. It has to be very clear. So go to the chart and practice all of these things here. Get familiar with market structure very well. And once you are able to familiarize yourself with market structure, this is when you want to now start looking out for your point of interest. You want to start looking out for liquidity, inducement liquidity, and how to get in the trade. So that would be it for this video. See you on the next one.